Our next topic is the cash journals. Cash journals, what we use when we receive or pay cash. Whenever we receive money, it goes into the CRJ. When we pay money, it goes into the CPJ. And whenever we make payments from the petty cash, then it goes into the PCJ. Sometimes the transaction will say receive trading stock. We're not receiving money. We are receiving trading stock. So we must read very carefully. In accounting, we read 3 times. Then we think twice and we only write once. Also, teach yourself to read the whole transaction from the beginning to the end. One word can very often make a difference in which journal you will put something. So make sure you read the whole transaction. We've done some new transactions this year to expand the CRJ and the CPJ. The first one, interest on current account. That is when we have a positive bank balance. Then the bank will add interest. We will see it on the bank statement. So it's a CRJ entry. If we have a bank overdraft, that means we're actually using the bank's money, then they're going to charge us with interest. They will show it on the bank statement. They just take the money, CPJ. Bank charges, this is for the services that the bank renders. Cash handling fees, EFT fees, any of those fees, all of it you add together and show in your CPJ as bank charges. Never show them separately. The only thing that you show separately is the interest. The rest you all add for bank charges. Carriage on purchases, we pay, so it will be in the CPJ, but then we must remember we buy trading stock, then we pay for carriage of those stock to our business, purchases. So now we add it to trading stock. So if we bought for 1,000 Rand trading stock, we paid 100 Rand to transport that to our business, then trading stock is going to be debited with 1,100. And then we add our profit to that in order to get our selling price. So that's a way of sort of getting your carriage on purchases back instead of showing it as an expense. Carriage on sales, when I sell and I have to deliver, that will be the expense. Credit card sales, be on the lookout for this one. It's normal cash sales. The fact that the customer paid by credit card doesn't mean they bought on credit. We're going to receive our money. The credit transaction is between the client and their bank, not between us and the client. So credit card sales, normal sales in the CRJ. Then we receive money from a debtor. We've done that in grade 9, but now we also allow discount, and that will be in the CRJ, where we just add a column, discount allowed. We pay our creditors. We've done that in grade 9, but now we're going to receive discount, and this is in the CPJ. So we pay credit bank, but now we also receive discount, and that will be an income account that we must credit. Then regarding the loans, 3 things that happen. The first one is we borrow the money. We get the money. We see it on their bank statement. The bank deposited the 100,000 or the 70,000 in our bank account. But then we must repay it. And this is now where the payment comes in, CPJ. And we must also pay the interest on that loan. But initially, we receive the loan. Initially, it's a CRJ entry. Fixed deposit, we invest money. We take money out of our bank account and we put it in a fixed deposit, CPJ. At some stage, that fixed deposit will mature. Then we're going to receive that money together with interest, also in the CRJ. When we borrow money initially, we see loan as negative. We want to put everything in the CPJ. But initially, we receive the money, CRJ. The same with a fixed deposit. initially we take that out of our bank account, CPJ, and after that, yes, we receive the interest and we receive the fixed deposit whenever it matures. So that is the expansion. Obviously in your CRJ you still have cash sales, you still have capital, you still have rent income. CPJ, you still have the drawings, you still have expenses that you pay, you still have assets that you buy. These are only the new ones that we add at the beginning of grade 10. And together with a petty cash journal very much the same as the CPJ. We're going to look at a trading stock account. That is activity 4 in your activity book, page 9, in your answer book, page 13 and 14. You will see in your activity book there are activities where you can complete the CRJ, CPJ, where they give you a semi-completed cash journals, and then you have to fill in some missing amounts. Also, you must just add few more transactions. Please make sure that you know in which journal to put these transactions and the contra accounts, in other words, in which column to put that. But there are activities, please use it to practice. We're only looking at this one where they give us a partly completed trading stock account and then ask us questions on that. This is the trading stock account from extra stores, and the first question is we have to fill in the missing amounts, A to F. Trading stock we know is an asset that will increase on the debit side and it will decrease on the credit side. We also know trading stock is shown at cost price. We bought, so the contra account must be bank. Let's write that as we go along. We bought cash, therefore we debit trading stock and we credit bank. B, the folio number or the journal, we bought on credit because it says creditors control. And where do we buy on credit? In the CJ. C, the debtors returned, debtors allowance journal. But everything in the trading stock account is at cost price. So what they returned, we will debit trading stock with cost of sales, the cost price of what we sold. Number D, the previous one we sold cash because it says CRJ. Number D, we will sell on credit, and we sell in credit in the DJ. Number E, creditors allowance journal, we returned stock. Our trading stock decreased, that's why we credited that, and we will debit creditors control. Because it's a liability that decreases. And the last one, drawings, the owner took goods for personal use, and we know that will be a general journal entry. The second question, they tell us that the business applies a 50% profit margin on cost price for all sale transactions. Now we have to calculate the total cash sales for the month. First thing, we must know where to start. Cash sales, CRJ, there's the amount. But that's not the sales, that's the cost of sales amount. So we must actually calculate sales if the cost of sales is 18,700. So you must be able to identify where to find the cash sales. We have the cost price plus the markup to give us the selling price. In this case, they gave us the cost price and they asked us the selling price. The amount given, 18,700, multiply by the unknown, the 150, divide by the known, the 100. And that will give us the total cash sales of 28,050. So important to be able to calculate from sales to cost of sales as well as from cost of sales to sales. And just by knowing which amount to start with. The next question, they said that we've posted incorrectly. And which one was incorrectly? On the debit side, they've shown drawings. And that can't be because trading stock is an asset. And we know that assets increase on the debit side and decreases on the credit side. So if the owner took trading stock for his own use, how can trading stock increase? Therefore, that one must be shown on the credit side, the other side. So that is our mistake. They debited trading stock instead of credited. The next question, they ask us to calculate the balance on the trading stock account. Calculate the correct balance of the trading inventory account after correcting the error in 4.3. So we know this 1,200 mustn't be on that side. It must be on the credit side because trading stock decreases. And now we must calculate the balance. So whenever we calculate the balance, we add the debit side and we subtract the total of the credit side in order to get the balance. If it's creditors control, we add the credit side, the side that is the most, and we subtract the smaller one. So on the debit side of that trading stock account, the balance of 42,200 plus 23,500 plus the 16,800 plus 4,200, not adding the 1,200. So the total, 86,700. If we add the credit side, 18,700, the cash sales, the credit sales, then the returns to the creditors, and now we add the 1,200 that the owner took, 33,820. So what is the balance? The debit side total minus the total of the credit side. So the balance 52,880 in the trading stock account. The second last question, how to confirm the closing balance. According to our books, we have trading stock to the value of 52,880. How can we make sure that we really have that on hand? We do a physical stock take. We count our stock. That can be done at the end of the month. That can be done at the end of the financial year. That can be done twice a year. Depends on how much stock we have and how easy it is to count everything. But a physical stock take will confirm the amount that we have on hand. And then the last question, in which financial statement will we show this trading stock? It will be in the statement of financial position. We have the statement of comprehensive income where we calculate the net profit. And that is basically income minus expenses. But trading stock is not income or expense, therefore it will be shown in the statement of financial position where we see that assets equals owner's equity plus liabilities. So we have the assets, owner's equity, which is the capital, plus the net profit minus the drawings, plus the liabilities, and that will be the same. Therefore, trading stock is an asset, will be shown in the statement of financial position. And I hope this will really help you to understand the new cash transactions that you've done and that you will be able to do the CRJ and the CPJ.